Guten Morgen. It is 6:36 on Wall Street, about 3 hours before the beginning of trading. It's time to get your quant on. Welcome to QuantBox Live, where we uncover the best fundamental opportunities across the global markets. My name is Wayne McDonald. I built QuantBox because I'm an economist. And doing all this research takes a lot of time, takes a lot of energy. You got to go into a lot of different databases, then pull them all together into your spreadsheets and then try to figure it out. It's really complicated. When you look at sentiment, inflation, employment, GDP, technical trends, open positioning, seasonality, and a whole bunch of more, you can do it yourself, one table at a time, or you can have AI do a lot of the work for you. So QuantBox automates your macroeconomic research so you get a sense of what's going on in the world so that your trading actually makes sense. There's logic behind it. You're trading the flow of capital, the factual flow of capital, not what you think, not what you want, not what you hope, not what somebody on TV said, but you just the facts, ma'am. Helps you organize your thoughts, like which ones do you want to buy, which ones do you want to sell, and why, and why. Nice, right? So today we're going to look at the commitment of traders report because it's Monday. We got a new one. That's what our COT looks like. Very cool. So, anyways, if you're watching this on YouTube, it's many hours delayed. Why don't you swing by quantbox.co? Start with the trial, see what you stink. It's $8 though. American bucks. Yeah. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. And yes, when you take the $8 trial, you do get the macroeconomics course and you do get the statistical analysis course. Mm-hmm. Statistical. Bomb. All right, just a ever so slight lean to risk on. Markets are just warming up for the new week. Lots and lots of news. The next big news, I think, is the Aussie news around midnight tonight. If you in New York, the New York time zone. So later today, basically tomorrow for most. But yeah, Aussie interest rate decision, big one. Okay, and just mixed across the board. Mixed. That's all. That's all. And you can see, you can go through all the statistical changes. I did a lot of this last week where I highlighted the change in gold, the change in VIX, this, that, and the other thing. Okay. These were heavily risk off, risk off, risk off. And now they're not so much. All right. So where's the flow of capital? Where's money going? Okay. Big changes. So here's what you do is you sort this. A lot of money has gone in to the US stock market. Okay? Money has gone in. Now still it's bearish, but a lot of money has gone in. Oops. There we go. Okay, money 60,000 contracts. It's still bearish, but that's a big change. 10,000 or 11,000 new contracts short, but 60,000, 6-1 basically. 6 bulls for every bear. So this might be changing. So it was a bit short, and so now it's maybe coming back around, which fits our seasonality model just perfect. So I don't know what to make of it. Is that the big thing? Maybe, but by the time you wait for it to happen, then it's already happened. So, anyways, so I'm already long. I'm one of these. I'm one of these 60,000 contracts. Maybe actually more than one. But anyways, I'm part of these contracts. So cool. Money has gone into oil. But remember, this is Tuesday of last week. Still heavily long, but also not just has been heavily long, still money going in. Look at 5,000 bears to 27,000 bulls. Yeah. 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 It's still bullish. The money hasn't come out. Okay. Cool. Now, the interesting thing is I've sorted this by number of contracts long. So 20,000 contracts have gone long. The yield on the 10-year, but 50,000 short. Whoa, whoa. Hey now. So yeah, okay. Significantly bearish still. So, anyways, we look at here. Mm, mm, mm. Come on, Google. Waiting for Google. Come on, Google. Okay. The biggest money coming out. Okay. 20,000. Amazing. I want to switch this to the biggest negative on the long side. Okay. Not big numbers here, but less bulls on gold. And as you can see, more bears. Interesting, right? Less bulls and more bears. Gold is bearish. Remember, it's also seasonal. It's normal. Cool. So, what you're trying to do when you're looking at this is we're looking in the changes of long and short positions, and you're trying to watch these things shift. So, if SPX was way bearish, but is moving its way from right to left, it's becoming bullish. And if gold was very bullish, but now swinging back around the other way, it's becoming bearish. It gets very confusing because a lot of these things have multiple assets. Like even oil, it's oil priced in dollars, not oil priced in euros. Okay. So you could do something like which one were we picking on? S&P 500, I guess. Okay. Big spike in longs. So we go back, like for example, let's bring it up. I guess I can just do that because I know it. Okay. So there's a net increase of 50,000 bullish contracts. Okay. 60 minus 10. Okay. So you can see the stock market became more bullish. Okay. So I wonder if that's going to be a floor for us. Hmm, we'll find out. Let's jump into today because this is longer term. Okay, this is longer term. So let's take a look at now, as of now. And you can see really it doesn't look like a lot of trading has happened. With the upper bound is plus 5%, the lower bound is negative half a percent, right? So half a percent up, half a percent down. So, you know, we haven't even really got going yet. That's how I look at it. except Bitcoin, which trades over the weekend. Wow. That is risk on. And I believe it was risk off and now is shifting to risk on, moving from a bullish unexpected to bullish expected. If you're not sure, like, where is it moving? Is it becoming more bullish or is it becoming more bearish? Well, actually, you can check that. I think we have it for Bitcoin. I think we do. Not even sure, actually. And just type it, Wayne. Just type it. Is it there? Yeah. Oh, don't do that. There you go. Yeah. So this is all the bearishness. And it looks, right? Looks like maybe it wants to come back around. Try to mark it. Okay. The way to read this, okay, when you see these areas, the pink candles, that's when QuantBox scored it as bearish. The blue candles is when QuantBox scored Bitcoin as bullish. Okay. It was bullish, and then there's this giant crash, unexpected. And right now, QuantBox still has it bearish, but what we want to watch is, you see how it's 0, 0? So what we're trying to see is it went from flat, 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 slightly bearish, slightly bearish, slightly bearish, slightly bearish, slightly bearish, quite bearish, and then flat, flat again. So then next candles could be blue, or bars, I should say. And that would mean that then QuantBox is scoring it more bullish than bearish. So this drop wasn't quantitatively expected. Although QuantBox went from an 8 to a 4, okay, days before the drop. Well, it went from very incredibly bullish to half as bullish. Okay. So, anyways, very interesting. Notice that we ended up double bottoming on this June 15th. Okay. And then up since September 15th. Cool. So maybe there's a floor. And now we know this is up even higher. So, okay, maybe it turns bullish. And so that zero, you see the two zeros in a row? That's where you get this you see it in the scatter plot. Let me go back to the scatter plot. The fact, right, there's the zero. That's the zero. QuantBox doesn't say bullish. QuantBox doesn't say bearish. It says neutral. Cool. So the question is, it might be working its way this way now. Bullish and expected to be bullish. Cool. Cool. Which means you might wake up in the morning and want to buy dips. So, like everything over here, actually, everything over here, even the stuff that's down, everything to the right. The reason it's to the right is it's expected to be bullish. Now, the things that are to the right but are down, they're bearish right now, but unexpectedly bearish. So these might be all your opportunities. You wake up in the morning and you want to buy these pairs if you can confirm it technically. So these Swissy is strong today. CAD Swissy, Euro Swissy, Kiwi Swissy, Aussie Swissy, Pound Swissy. They're all down about 0.5%. Oh, forget it then. Okay, well, maybe that's not so frightening, right? So what you do is you're like, oh, these are slightly down, but they're expected to be up. Maybe those are my opportunities. Because looking at the Swissy index here, okay, we might have one of these things in our future. Don't you stink? Okay. And that would push those Swissy pairs up. Okay. And you start looking for ops. You want to buy the Kiwi Swiss franc? All right. Well, where's the buy zone? Is it the weekly buy zone? The weekly buy zone. Delete, delete. There you go. The weekly buy zone is, I think it's here, and that's the target. The only thing is the monthly supersedes it. This is the monthly buy zone. So if you want to be a fancy pants, you say the monthly supersedes the weekly, but both are bullish. Just weekly's not bullish this week. What? So you say bearish until here and then bullish the rest of the month, which is actually way up to here. Whoa. Okay. Because, okay, that would be a weekly bearish plan, and this would be a monthly bullish plan. And you want everyone to participate. I used to think it was a zero sum game. Now it's a sum game. Some win, some lose. That's what the Bears want to do. It doesn't change my longer term outlook. So, like, by all means, right? I'll skip this song. I'll catch you. I'll catch you at the bottom. So anyways, that would be that. Then you want to double check higher time frames, and yeah. You start to like look at things like this. Let me kind of just move it around. Okay, it's top-ish. It wouldn't be terrible to have a pullback down into there. So, right, a down week to an up month, maybe, maybe, but you're still in the business of should I buy this dip? Okay. Well, we're still on the daily five, and we haven't really made a lower low yet. But those pivot points are important. That's all. So I'm gonna trap us in here. Okay. That could be the bottom. That's Friday's lowest low. Look at that. It's- Could just be random. I don't think so. It's a pretty easy number to pump into an algorithm, right? Look at the previous day's low, make that support. Like pretty simple stuff. So it seems to be important. Now, if I was a bear, what I would do is I would sell in this zone right here. If I was a bear, I'd tear this down. Okay. I don't want to be a bear. But anyways, that's that. Maybe that's Kiwi. Then you look at Aussie, much closer to that central already. Now, for you bears that want this to come down longer term, this is a very obvious pivot. And for those that are selling, this is your target way the heck down there. That'd be nasty. Nasty. If you're a bull, you're like, whoa, really? Yeah, that would be terrible. Because that's generally risk off. That's things are not good. That would place us down at a double bottom. But even though technically that's totally possible, like look what's going on here, right? Clearly, this is not a random walk. But what that means is it's there's still a lot of risk off mood. Okay, that would just mean more not up if you invest in the stock market, but not necessarily down. But ugh, right? And then I get all sad, crabby. I'm like, this is what it's going to be like for the next 5 years. It's going to be horrible, right? Like, I'd like some good news, but remember, many people in Wall Street have only been around for 10 or 15 years, right? So they think when the recession is reverted and we go bullish again, the stock market's going to rally 20% because that's what it always does if you only have 15 years of experience. What made the markets rally so much after 2008? What made the market rally so much after COVID? Well, the Fed, for example, pushed it up. Quantitative easing pushes it up. That's what it is. It's designed to increase asset prices. Cool. So, if we avert a recession, do we get some free money from the Fed? No. Do we get some free money from the government? No. They're being so bold as to ask people to pay their student loans. What is the world coming to? Well, that means you can't buy new PlayStations. You can't get the new Apple 17. Yeah, you have to pay your debt, bro. But that means Apple's not going to sell new phones, huh? 10% of Americans that are between the ages of 25 and 35 have already defaulted on their credit cards and they have no money in their bank. That's why they defaulted. But they decided to buy the iPhone first. Not cool. Not cool, bro. So, anyways, 10%. Like, that's not even, that's a lot of people. Is that a bad sign? Well, Walmart's removing all of their self checkout. They're started in 2 stores and they're going to roll it out. What does it say? We had this grand experiment where we can, over the course of what, 5 years ago, that started to come out self checkout. And after 5 years of studying America, all over America, not just not just Walmart, but Target and your grocery store, and there's a lot of places with self checkout. They're taking them out because people are stealing. That just bums me out. It doesn't surprise me. Like, I mean, like I'm not making a statement about like it doesn't surprise me, but I'm saddened by it nonetheless. I'm like, maybe it wasn't a good idea to begin with, but it still bums me out. I was hoping to be surprised, like, yeah, people are trustworthy and ethical, right? But anyways, um, so yeah, too bad, so sad. But maybe people are broke and they have no choice. I don't know. But nonetheless, interesting time to be alive. So when do we get this big 20% rally in the stock market? I don't think we do. Ever. again, unless there's quantitative easing. Right now, we have quantitative tightening. So I think this is going to be a renaissance for hedge fund managers. The rich are going to get richer because they're going to make find smarter opportunities for their money, and everyone else is going to stagnate. Remember, and we talked about this a few years ago at Investor Bootcamp, formerly known as an FX Bootcamp. For the last 15 years, everything went up because the Fed was pumping free money, quantitative easing. So you didn't need a hedge fund manager. You just buy anything. It didn't matter. Just buy the S&P 500. It was ridiculously cheap. You don't have to pay a hedge fund manager 20%. Or you do have to pay a hedge fund manager 20%. You don't have to pay the S&P 500 20%. So you just buy the S&P 500. It's super cheap. You don't need a professional. Just buy anything. So now America's shifted over to all these passive investments. And guess what? Probably move sideways for 5 years. Everyone's in the wrong basket again. Late once again. So now the smartest money, the biggest money, the ones that have active professionals are going to be able to uncover hidden value in the market, make money. Cool. So there's going to be a shift there, which is kind of interesting. What does this mean to you? You're like, Wayne, why are you babbling on about this? You are going to be the expert. You are going to take care of your money. You might even end up managing other people's money. But you're the one, like, through your trading account and investing account, you're going to be the one that's actively creating what we call alpha. Your ability. So if the stock market goes up 10%, down 10%, up 10%, down 10%, up 10%, down 10% for the next 10 years, well, you should be able to make money on that, where everyone else just waits. Okay? You just wait. You will be able to make money because you know how to trade a range. Okay? Cool. Add some, these are things I wasn't interested in, but maybe I'm interested in now. CAD just got crushed Friday. Okay. But now we're closer to a buy zone. If you were thinking about getting back into kitty cat. Okay. Swissy, strong today. Okay. But against yen, USD, look at that bounce there, huh? So now we're back to yearly M2. Seems like we hesitated there, huh? I'd like this to move sideways. I'd like both of these to be bearish. Yeah. Go to commodities. Watch your oil this week. Beautiful price. You got that 618. Okay. And it's held. It hasn't fallen. Okay. Now it's at the actual 21. It's below the predictive 21. So it's a little bit inconclusive. Okay. So you might want to compare this area to where we are now and see how desperate you are to get in this trade versus do you have time to be patient and disciplined. We want to look at the S&P 500. Is it buyable today? Is it buyable this week? Think we could trap it like that for now? Okay. Like I said, gold is seasonally supposed to fall. We've tracked it, money flowing out of bullishness and money flowing into bearishness. This makes sense. It is happening, not just in price, but in volume. And it's supposed to happen this time of year, and it is. Cool. Again, all that information is inside QuantBox. Like, for example, what we also know is somewhere around this period, somewhere around this period, money did flow out of bearishness and into bullishness. It did. And I actually bought here, not on this account, but I did buy in there. And so it's interesting, like you see it now in the commitment of traders report. It's still bearish, but there appears to be a shift. Okay, what we don't know is maybe it has to do an inverse head and shoulders first and take a whole month to go back up. We don't know these things, but what we do know is there's an increase in bulls and a decrease in bears. Okay. Our trade plan a while ago was take Bitcoin up from 25 as high as 31. And here we are at 28. Holy smokes. What? Never said it would happen in 2 days, but anyways, clearly support, right? You don't have to be a rocket surgeon to see all of that. Okay. Boom, boom, boom. And then all I'm doing is predicting the top of the range. But holy smokes, we went from 26 to 28 in, a heartbeat. Boom, boom, $2,000. Wow. Wow. And that's a lot. And we saw that in the scatter plot. So I feel like I said too much. I hadn't said enough, but we'll leave it at there. I will see you later today, I'm sure. Lots of news this week. Remember, the next big one is Aussie. So watch Aussie interest rates. And then New Zealand, one day later, they're going to do interest rates as well. All that kind of stuff. A lot of other stuff. Obviously, this is an NFP week, so you should have it all kind of in your brain, anyways. But without further ado, peace on earth. May the pips be with you. May your profits be above average. Thank you for everything that you do. And I'll see you when I see you.